Welcome to TheoTrade video for January 6, 2016. This is Don Kaufman. Wow, I thought 2016 would be volatile. You want volatility? You got volatility here. That's all I've been talking about in some of these evening videos is the extraordinary volatility. But starting here this evening, looking at the S&P futures, and we're still open. Okay, we still have almost 15 minutes to go to the close, and I just wanted to display the ranges inside of the futures because right now, right here, listen carefully. It's all about what the futures are doing. Individual stocks, do they matter? To a degree, okay? But they're kind of just following suit. All right, other than Netflix, which had, some news out because they're at the Consumer Electronics Show and they have something cool. Anyway, across the board today, volatility is the word. Apple, threatening the $100 level, cracks under it for a brief, fleeting moment. But when I say look at the ranges over here, so I started to kind of zoom into this, but then I was like, wait, now I got to show intraday trade. We're having 30 and 40 point ranges. Now, this right here is the cash open. So we actually traded right at the cash open about 1975. We ripped to 1995. That's a 20-point move to the upside, only to fall to 1970. Okay, so we have a 20, plus point move to the upside. We actually turn around, fall by 25 points, and then we're taking back off now to the upside. But don't you worry, there's 10 minutes left of the trading day, and there's quite a few negative ticks on the horizon. And all the volume that we're seeing is in the first hour and a half of the open and the last, hour of the close over here. Now, granted, there was FOMC minutes. The FOMC minutes, they didn't do it for me. They didn't do it for me because if you want to zoom into the FOMC minutes, here are the FOMC minutes. The volume kind of pales in comparison to what you're seeing, again, here in the last 15 to 20 minutes of the trading day. So where does this leave us? Okay, so you got all this volatility. Kind of what does it mean? The futures right now, they've gripped hold of the entire market. Okay, there's not a ton of traders that I'm talking to, and I talk to all kinds of traders throughout the course of the day, but everybody here is focused on the broader market. All right, to really kind of kick this off and give you a little bit of analysis, I'm going to go to the SPX briefly, and not so much of a chart of the SPX, but we're going to look at the expected move. All right, so right now the expected move, still with Thursday and Friday to go to this week, right? So today's Wednesday, the chicken is pretty much done for the trading day over here, even though we're trying to sell back off into the close, maybe even head back down to the lows. We're looking at a $30 expected move. But where were we, okay? Where were we earlier in the week? And to do that, just look at the Analyze tab. Go over to Think Back, and this, of course, on thinkorswim. And the reason I'm taking you back to where were we earlier in the week is to kind of give a little bit of a litmus test of risk and expected move. So I've just taken this back to January 3rd because I wanted to see what was the expected move of the 5 days to go. That expected move is about $42. That's with the S&Ps, though, sitting at what? Roughly speaking, 2043. And again, I just want to enunciate this for a moment because here we are with the S&Ps 2043, and this is Sunday night, okay, showing that over the next 5 days we should have right around about a $40 to $43 move, which would take us right smack down to what? To about 2,000. Now, have we exceeded that? Of course we've exceeded it. There's the S&P right now. Okay, trading at 1987. So we've actually blown outside the expected range of this week. Now, there's nothing to say, okay, that you got to be inside of an expected move. But there's a decent probability that we can come right back up into this 2,000 range by Friday. So the way you got to think over here is, all of a sudden the entire world, I'm so bearish. And right when you start to get bearish, if you're out and you're thinking about buying puts right now, you know what? We could get crushed overnight. However, okay, anytime you see these wild down moves in the midst of the ugliest down move you're going to see, The wildest moves you'll see are actually to the upside. And I want you to be thinking a little bit that way because 2016 is going to be volatile. Okay? Trying to predict direction day to day is, again, it's like trying to predict order flow. It's like throwing, okay, a bucket full of rocks up in the air and just hoping you don't get hit in the head by one of them. And people just don't get that about volatility. It's not just about risk. It's about the unpredictable nature of the markets. But this is what drives the huge opportunities in markets and premium selling. So here we are looking at the SPX. And, the volatility doesn't look as heated as I would have actually thought, but the bonds are up 2 full points in today's trading session, so it's still getting done out there. There's a lot of risk on the table, okay? But then I went down below in the SPX and I looked at its IV percentile, and it says 33%. That basically says that implied volatility, it's still towards the lower end of the spectrum of what we've seen throughout the last 52 weeks. Now, granted, this includes August 24th. And in August, you have to almost discount that because it's such an extreme move. But you still need to stay constrained in wanting to just unload the boat and sell premium right now. Okay? I'm actually telling you, be reserved in your trading right now. This could be, all right, we could be at the forefront of some much more serious moves in markets. And what we want to look for, okay, tomorrow, which is Thursday, Friday, are we going to get those wicked bounce moves that traders possibly could be selling into? Every, glimmer of hope that we've had in today's trade, and I'm going to go back to like a 1-minute chart over here, every glimmer of hope we've had inside of today's trade, and this is an SPX chart, has been sold. Every time we've tried to rally, and it's been numerous times today, has been met by more selling. So the inverse is true. If you looked back over the last, again, we can go back all the way to, in this case, 2009 or even 2011, the last time we've seen really ugly bouts of volatility. But we've moved from a position of buy the dip, buy the dip, buy the dip, buy the dip, which you've heard for the last 6 to 7 years, okay, to all of a sudden, everybody right now is talking about sell the rally, sell the rally, sell the rally. And again, every glimmer of hope, all right, whether it's on an intraday, okay, or whether it's day-to-day, has been sold into. Traders right now are looking for opportunities to get the heck out of their positions. Okay, again, a couple of bright pockets in the market today. There aren't any. Come on, Netflix, do you think it really counts? It's a news announcement. It's up $10 on that. Okay, you are looking at some underlyings, though, that got hammered in recent days, namely Facebook, okay, Google, Amazon, faring very well in the market today. The overall NASDAQ is only declining about 1.35%, when the broader markets and the S&Ps, look at this. We're facing a 1.7% decline in the broader market today. This is not the way, of course, that you want to start a given year. And the order flow coming into the close over here, it's big, it's ugly, and it is negative. In the coming days, again, look for the rip your face off rally. As you get those explosive rallies, what it is, short covering. And a lot of people that are short out there, they're actually going to cover because they're all thinking the same thing I am. All right. Experience knows that in the midst of these down moves, the craziest move you're going to get is going to be to the upside. Last but not least, try to stay focused on what the broader markets are doing. The broader markets, it's all that matters. I say this, okay, not in jest, but because when you get larger market moves like this, you're going to get 95% of stocks moving in confluence with the broader index. Take a look at the advanced decline line. This is now the S&P 100 advanced decline line. Show it on a little bit of a broader take over here. This is the 100 stocks, or I should say 101 stocks now inside of the S&P 100. You're getting exactly that. So they're going to be moving, all right, again, with the broader index product. All right, if you also take a look at major indices, okay, you're going to see that whether it's S&P 500, but I'm also going to look at the sector indices in this case. So looking across the 10 sectors, they're down, all right? Leading sector to the downside today is none other than oil. Now, that is something I haven't discussed really, tonight, is oil kind of sparked a lot of the selling over here. Meanwhile, if you take a look at financials, they have also gripped hold and they're exceeding the S&Ps now to the downside. Not just energy alone is going to drive a market to the downside. And that's what a lot of traders, they'll get you to believe like, it's all about, oil over here. It's not just about oil. Okay. You don't get 10 sectors to the downside when it's just about the energy over there. That's just exacerbating some of the move that you're seeing on the screen. Again, stay tuned to TheoTrade, and you got to tune in to the chat room or the archives. It's not just myself anymore. We brought on officially today, Jeff White did his first segment. Check out the archives. Again, those archives are found on TheoTrade in the members area there. If you haven't actually checked out the site at all, it's right here. Go under archives, the member chat room archive. You can see different archives there of my session, his session, our coaching sessions. It's all in there for you. Replay it any time of the day. Replay it on your mobile applications. Thanks a lot, everybody, for joining us here at TheoTrade. Bye-bye.